Hey friends, Lucian here with the Bullish Bears team. Wanted to make this video on the rising bottom or ascending bottoms pattern. We're going to be broaching areas of drawing trend lines, extremely important. If you want to know how to draw trend lines, obviously just become a member of our community. We have a whole private members only content section which has videos explaining how to draw trend lines. So I'm going to show you the basics of it in here, but I'm going to show you a very helpful resource that we like to use, Investopedia.com, read you the definition of rising bottom, and then show you some real world examples. So, rising bottom. It's a pattern on a securities chart that results from the daily low price rising over time, creating a series of ascending trows. Technical traders use this pattern to confirm that the trend of the underlying security is heading upwards. The chart below illustrates a security that has three rising bottoms, indicating progressively higher lows over time, also known as an ascending bottom, right? See these higher lows, higher lows, higher lows? You can connect this line and get a trend line going upwards. So let's look at several examples of how this looks in the real world. Let's look at Apple, right? So you can see here's a low, like a base here, and a base here. Higher lows, right? The lows are getting higher. I can connect these three lines right here, right? So I can connect these three lines. I'm going to show you this here in a second. I can connect these three lines. Well, look at my line. I have it extended all the way to the left and all the way to the right. So you can see this goes back to another previous peak over here and another previous bottom. No coincidence. This is what happens with trend lines. Extremely important. So this base right here, when you extended it out further, hit this peak, and all of these other ones years later down the road, traders pay attention to this. Support areas, right? Support, support, support. Price went up, fell in, buyers bought back in here, obviously went back up. Buyers came back in right here at support, went up. Buyers came right back in, and bought it back up. Obviously, this line extends more out into the future. So who knows what's going to happen if this keeps rising with Apple. I'm sure the price will eventually fall at some point before the buyers either come in or it either sells off. If you can see right over here, if I connect these two peaks, right, you could see this tells a different story right over here. So if I remove this one over here, let me just get rid of, no, not that. Let me do this line. Okay, I'll put that peak back, or that circle back, right here. Okay, so you can see me, I got it connected right here. Just, it's close enough. I could have moved in a little bit more, which went back to these other areas. Boom, 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 right? So you can see as I connected these lines right here going up, you can see it tells a story, right? It all went all the way up to here. Now, look at what happened over in this area right here. Very important to take note of. Let me stop that. This area right here, which would have been, a bottom here, another bottom. What happened? Price failed, right? It didn't stay there. The buyers didn't come back in. They came back in over here, right? So that's where now I end up kind of moving that trend line to a different area. I would then move it. So now it's got a new base. So I can kind of go out a little bit further with it, right? So I can kind of, again, there's not going to be like, you got to eyeball it a lot of times. It's not going to be perfect. Just show you over here. So you can see it kind of just hits a little bit of a bottom here. So now it went out, right? So now you keep these lines on your charts, and then you can see more further down the road of what, price might potentially do with support and resistance. So let me show you several different examples. This happens over and over and over on pretty much any stock chart. Some of the garbage like penny stocks or small cap companies might not have defined as many defined trends like this. That's where you might find triangles and other types or flags, stuff like that. You might not have, clear uptrends and clear downtrends as much, but you'll find shorter time frames of them, sometimes not as long, but it's all about finding these defining the trend, looking at the candlesticks, look at the patterns, and then look at the patterns within the pattern. And that's where this is the whole name of the game of trading. It's finding support and resistance. You can see right here, higher low, higher low, higher low. You have 3 ascending bottoms, right? Connect the dots, right? So look at this. I'm just highlighting 1, 2, 3 areas, and I have my lines pointed back and forward. Now let's go back. Look at this, connects to this bottom, to this bottom, to this bottom, right here. So what's happening over here happened over here. But if I just connected this, and this, right? So let me just remove the line. Pretend like these 3 circles don't exist. Pretend like this didn't even happen. If I just connected back here, right here, to this level here, then to this level here, it's already given me these other levels in the future. And look, right? Price went all the way up. What did it do? Boom, right here. Buyers came back in. Key now, support level. I can connect these bases, these rising bottoms. So now, months or years down the road, that line's going to still continue out, and price is going to be, it's going to obey that line, meaning it's going to be a very critical support level, and then in the future it might become resistance levels, right? I mean, it's all about support and resistance, connecting these lines, finding trend lines. Extremely important, these trend lines, because they do horizontal support and horizontal resistance. Let's look at a few more examples. GDX. All right, so you can see here, base here, base here, base here, right? So I'm going to do this. I'm going to connect these bases. They're not going to be exact always, I can kind of go up here, right? That tells one story, but sometimes they adjust. So I'm going to kind of just go with these ones for right now. You're going to see a couple here. This one kind of was up a little bit, but this tells a story, right? Price went up, kind of came back down. It stayed above, went up, hit support, went up here, came back down. Buyers came back in, back in. You can see these other little baseline areas, right? If I want to make them a little bit, I can make it a little bit tighter. So let's see if I wanted to go in like this a little bit more and maybe kind of get a little bit closer of a story, right? Right over in here and here and here, right here. That might be a little bit better. This tells you a story. Now look at this, right? Buyers came in, buyers came in, they came in, they came in. Right up here, look what happens. When this trend line fails, look what happened. Price just tanked. Boom, boom, boom. Now it created a new trend downwards, right? There you go. Rising bottoms, descending tops. This is trend lines. This is support and resistance. Price really obeys this. So this right here, rising bottoms, gives you a trend line. When that trend line's broken, look out. It's a very critical area of support and resistance. Doesn't mean always price is just going to tank like this, It just creates new, trend lines. Here you go. There's one there. Now you can come back over here, and it's like this is over here is doing a different trend line, right? Kind of going across different channels, right? Trends up, trends down, trends trading sideways, right? So you can look at this. All of these, look at these lines. They all connect from back here to all the way in the future, from up here to in the future. Connecting the dots, right? Peaks and valleys. Connect the peaks and the valleys, and you can say price just completely obeys. Meaning doesn't mean like it's going to do it. It's giving you the support and resistance area is what I'm saying. So when it obeys it, price pays traders pay very close attention to these trend lines, support and resistance. It's all about support and resistance. Extremely important. Let's look at one or two more examples here. Let's go to SUM, S-U-M. Right here, rising bottoms, right? Here's one here, here, here. Let's connect these dots. Right? Connected those dots. But look at that. It connected this dot down here, and it connected this dot down here. So if I didn't know these were there, I could have connected from here to here to here. And look, price, buyers here, buyers here, buyers here, buyers here. What happened up here? It fell. It broke, right? Now you might have to draw another trend line out, this way, right? But look at what it does over here. It gets some of these other previous peaks from the channel. No coincidence that if I actually had these on my charts right now, from back here, it would have told you in the future. That's why if you extend these lines out, they're going to be important months and years down the road from now. So what happened back here is now very important for way up here, right? It's finding these trend lines, finding these triangles, very important. These triangles are so important, within not only the triangles, it's the smaller patterns, it's the bigger head and shoulders, cup and handles, bull flags, bear flags, double tops, double bottoms, all of those things. Those are all the things that we teach you in our candlesticks course. Make sure you take them. This is just getting you right to the point where now it's like connecting all of these dots, that all of these little candlesticks tell a very important story, and you connect these dots, you connect these lines, you connect these peaks, right? You connect these areas, you can see these these triangles, right? See that? So I just connected another again. I just gave you it's kind of like a wedge pattern, right? An ascending wedge, right? So you can just do these lines all over the place, right? Just connect all of these lines, connect all of these dots, and they just tell like a very powerful story. Channels, finding these channels, connecting these dots, see where price is. Is price in the channel? Is it out of the channel? Is it at the top of a channel, the bottom of a channel? Buy low, sell high, right? Be careful when price gets to the peak of these channels, because then people start to take profit. Be careful when price gets to the base of the channels, because that's where the buyers want to come in and start to buy them again. So this happens over and over and over again. This is the name of the game to trading. So if you've taken our course up to this point, you've seen that we're like starting off with very small patterns, bullish and bearish candlesticks. Then we go up to like things like hammers and dojis and hanging mans, and then shooting stars and morning stars and evening stars and bullish harami, bearish harami, all those small little patterns that go into bigger patterns, cup and handles, right? Double tops, double bottoms, ascending triangles, descending triangles, all of those patterns, so important to find. And then within that, finding horizontal support and resistance, drawing triangles, drawing these trend lines, seeing what's happening, finding these triangle patterns, and seeing the patterns within this, like this ascending wedge, seeing cup and handles, right? Seeing double tops up here, seeing U bottoms or V bottoms or inverse head and shoulders, left shoulder, head, right shoulder. You see all of these patterns happen within this big overall picture, which tells extremely important stories of support and resistance, which is literally the name of the game when trading.